Welcome, everybody. I am John Ryan, and I'm joined, as always, by my co-host Steve Merrill of WagerTalk. Welcome to the show, Steve. How's everything going this week?
Doing well, John. How you doing?
I'm doing great. This market is really something. We'll get right to it here. Um, that's the S&P 500 stocks, but more importantly, let's take a look at this because this is the major engulfing candle that unfolded in yesterday's trade with Bitcoin. And you and I have been very consistent saying about the tops being in the upper 60,000 range on Bitcoin. And here we are. And I'm going to just enlarge this a little bit because we have the Fibonacci retracements on here too. Because now with this engulfing candle right here, which is monster in size, it's bigger than the previous one that happened in Bitcoin, which led to a drop of about, what was it, 45,000? Went from 60 basically all the way down to 15-ish. Who's to tell what's going to happen next? But this is a warning sign. A bearish engulfing candle of this magnitude is certainly a potential sea change, and the sentiment is overwhelmingly bullish right now. I can't tell you the number. I did a little Twitter app searching on Twitter for people who were saying that Bitcoin was on its way to 300,000 or more, and the number was very, very high. 6 months ago, I probably would have gotten none, but here I got quite a few. And let's see here. We got a rally going on here, but this is normal pattern here, Steve. And I think, I looked at the put options on the Chicago Mercantile Exchange, and for whatever reason, they just aren't cheap enough for me, and the liquidity is horrible. So I had tweeted out earlier today about doing a put spread, and that's my lab Manny chewing on a box. But anyway, it's just not liquid enough to do. So I'm trying to search for a way to short this other than just shorting it with the Chicago Mercantile Exchange futures contracts. And I've come up empty. But I do think we're going to be down tomorrow. And what are your thoughts here?
Yeah, I mean, the trend is obviously still vastly up over the several months, the weekly, daily, monthly, year, whatever you look at, it's still an uptrend. But I do feel like if you have not gotten into Bitcoin, you're definitely late to the party. And I would wait to see how this plays out. I don't know if it's time to short it yet. We need some confirmation on that as well. But you definitely don't want to jump in here off the pullback yesterday, although people obviously did that today. You see that up candle. But there's a lot of things about that up candle today which are not encouraging. First of all, the daily high is 68.2. The open yesterday was 68.6. So it could not even reach yesterday's open at the peak. It is closed right now about 67.7 as we do this around 3 o'clock Eastern. So it doesn't look like it's going to get above yesterday's open. So that is going to be an engulfing red candle from both sides of the big green candles. So it does look like the peak yesterday, which, by the way, in the future markets hit 70,195, opened at 68, hit 70, right over 70. And you and I talked about that last week, how that's the new resistance level. Now, of course, if it closes above 70, and I said this, if it closes above 70 and holds 70 for a couple days or maybe a week, that'll become the new support level. And that's what happened way back when futures started in 2016. 20,000 was the open. It plummeted back down, never went above 20 again for a couple years. But once it did, that became the long-term support. And even when it plummeted last year, it got down to 16 or 17 for a day or two, but pretty much stayed above 20. And then the breakout was around 28 or 30 last year, all the way up to 70 now. My gut feeling is that we will get a pullback here, especially since that engulfing candle yesterday doesn't look like it's going to be taken out. A couple other things I'll point out about Bitcoin, though. It was a perfect storm for upness on Monday. Mondays in general are pretty up for Bitcoin. It's been that way for years. It was also the first trading day of a new month. It was also the, well, technically not, I guess. Friday was the 1st of March. So technically it wasn't a new month, but it was the beginning of a new week as well. So you had like new month, new week, new day, a lot of things that people come if they're, and it's obviously an uptrend. So you're going to have a lot of buyers. So maybe that's a little bit of the correction we saw yesterday. But still, that was a big correction. 70,000 is a key support resistance level, as I've said for a long time, and it did not break through here yesterday for more than a couple minutes. So not a good sign. If you're not long, I would definitely not get long unless it breaks above 70 and holds for several days.
Yeah, I completely agree. Another interesting thing is I took some notes on the ETF that BlackRock launched, and they were the fastest to $10 billion in assets in the history of ETFs. And it's the Bitcoin ETF, which is IBIT. And let's see here. I can pull that one up here too, I think. Let's see, IBIT.
Yeah, I think what's happened too, John,
That's
I
it
said
right
this on
there.
the show last week, is everyone thought once all the ETFs went live, they would be a buy the rumor, sell the news situation. But I think what I failed to realize was that a lot of people, once they could buy Bitcoin ETFs, were going to jump into them, which means more Bitcoin had to be bought. So now I think we're seeing what I thought would happen when they went live a month and a half, 2 months ago is happening now. Now everyone's gotten in. I think that's the real question, is like how many people have still not gotten into the ETFs, which are going to. I think most of them probably have, and that's what you're saying here, with this one.
Yep. And even on this chart, this is doesn't trade the number of hours that Bitcoin does. Doesn't trade round the clock, in fact. But just the fact that we're not able to, and this opened at 9:30 this morning Eastern Standard Time. It's basically putting in a doji, which is another harbinger of a possible sea change. And the volume on this contract, despite being 10 billion, is actually pretty low compared to what it did yesterday. 107 million shares yesterday.
And John, go back to that other big volume day to the left there. Look at the candle it made there.
Yeah, I mean
It's
that's
unreal.
the first bearish sign there too. And
I mean, it made a
so
peak
we
but
had
couldn't
these
hold it,
big
and it basically
moves.
closed at the open after a huge run up. It came
Yep.
right back down that day, and that was like the biggest volume day other than yesterday. So the two biggest volume days on that chart are both very, like, the two most bearish candles on the chart also coincide with the two most bearish the two biggest volume days, which is a truth indicator. Obviously, more volume, just like more possessions in a basketball game means the score means more, right? We've talked about that, and that's a really remarkable when you look at that now. About six bars over, crazy.
Yeah, I think it's just a short squeeze. It feels like it.
Yeah.
I've seen, how many have we seen over the years? Many, many, many. And it just feels like we're close. So I am willing to bet that we're going to be potentially lower in a week, and maybe a lot lower. We go back to the chart I
Well,
was
and I
holding.
mentioned too, like if you're not long, definitely hold off. Make sure 70 holds if it ever gets through there. But then again, you probably could take a short position now, like we've talked about with natural gas. The opposite with natural gas, being very low. Your stop loss on this is pretty simple. I mean, I'd put it
Yep.
maybe at 71 or so because, we see it spike to 7. Because the problem with the intraday stop losses is that they get taken out sometimes. It drops back down, like with 70.2 yesterday. But yeah, I mean, the risk reward on this to the downside is pretty good. If you have a tight stop loss around 71,000 and you're disciplined about it, if it takes that out, get out. It might be running after that, but you're risking like what, a couple thousand for like a 30 or 40,000 downside potential here. We've seen that happen. It
Yep.
was at what, high 60s a couple years ago, went down to about 1620. So I mean, it could happen again. It could easily drop to 40. I think 40 or 50. I mean, there's a lot of support levels that it could get back down to from the past.
And the Fibonacci numbers have always come into play on retracements. So what I did was I'm presuming that the top is in at 70,195. And even if we take that out tomorrow or the next day, I can always adjust this. But right now, if that stands, your initial downside target is the 23.6% retracement. That puts us at 58,236. Now, I don't fine tune it like that. I mean, anything like 58.5 might be a good place to
What's the
cover some
38?
short.
I think the 38 is very likely.
And then the 38.2% retracement is 50,836.
Wow, and I
Or
didn't even know
837.
that. And I just said 50 on the top of my head, just knowing some key levels. And keep in mind, what was it when the ETFs launched? It was in the 40s still, I believe. I don't even think it was at
It was
50
it
yet.
was actually, I guess, right around in here.
So what is
Well,
that
wait a minute.
level?
Let's see. This is the first. This
It'd be
is
what, the second
Bitcoin.
week of
So
January or so, like second, third week of January, probably.
yeah, it was. Yep, that's when they launched. And I follow BlackRock. So obviously, I mentioned that before, but I think that's a sign, a warning sign too. The fastest to 10 billion of any ETF in the history of man. That's not normal. And Bitcoin is not a normal stock. It's not like buying, speculating in Nvidia, for example. And that's a good segue into the next topic here.
By the way, just the low I'm looking right now, the low in like late January when everything launched was like in the 40,000 range on the futures. So say 40 to 70, that's 30,000. So just take even half of that is down to 55. So even a 50% retracement on the recent run would be 55,000. So you're talking about right now getting short at like 68. You've got like a 13,000 versus like 3,000 risk reward if you put your stop loss at 71. I like the odds there. Let's just put it that way. It might not happen, but I like the odds. A 13 to 3 ratio is like almost, you only got to be right about 25% of the time. I think we have a better than 25% chance of being right about this being the short-term top.
Yeah, I'm with you. And Nvidia here is, it's just an amazing stock. You're trading at 885 now. I did calculate that of the 2.5 billion shares, Steve, that they have, a $100 move is approximately $250 billion in market cap. That exceeds 94% of the stocks in the S&P 500 and their respective market values now. So it is amazing what this stock has done, because before the earnings, which was right here, and let me just blow this up a little bit. Earnings came out on this day after the market closed. The close on this day was 674. So now we are essentially, what? We are 500, more than $500 billion higher in market cap in just really a few, not even 2 weeks. It's just amazing. I think too that's there's a little bubbling action going on, I think, in these markets, because the complacency is just ridiculously high. Nobody fears anything right now. And I remember Warren Buffett had always said, you have a seesaw, right? On one end is greed, the other end is fear. And when fear is very low and the greed is very high, which I think it is right now, that's when you get tops. And conversely, bottoms are formed in the opposite way. So I think there we have a situation too, where I think in a couple of days here, let's see how far this thing short squeezes. And maybe it gets up to 950. I'm not smart enough to know, but I know if we get one of those engulfing candles like we had in Bitcoin, I will definitely be putting a lot of bear spreads on and conservative but aggressive, well-defined loss type of option trades, which we'll go over on the next show. But I here again, I would not step in front of this. Like, what's the opposite of catching a falling knife?
Yeah, Gabe Morency and I came up with dodging a speeding bullet. That's the one we've come up with.
Yeah, okay. Well,
that's an original.
Well, if you the danger here is you buy it, and then all of a sudden the speculation ends, everybody's long, and then the selling pressure has nowhere to go but down, because everybody has got their buys in and it's going to the moon. And those are the times where the buying support evaporates and voila, you're down 50 in a day. And this stock definitely has the potential to do that. If you told me that it was going to 816, 810, even by the end of the week, I wouldn't say you're wrong.
Yeah, I think the thing for me with the whole market in general, and it still feels like everything's kind of a bubble. But then if you look at the historical indicators, there's really aren't a lot of bubble indicators. Everything's in an uptrend still, and it's like I do think the valuations are a little high. But the real X factor for me is artificial intelligence. I mean, I don't know a lot about AI. I'm kind of going to take a wait and see approach on it. But if it's as big as everyone's saying it could be, this could be like the internet, the automobile, and the industrial revolution all rolled into one stock market cycle. So I think that's the key here, and that's why Nvidia obviously is running, because they're at the forefront. You look at Microsoft's like the biggest company now; they've surpassed Apple because they're reborn with AI, and That's the unknown factor. I mean, we can look back 5 or 10 years from now and be like, things really were cheap because we didn't realize what a revolution was coming. I personally don't understand how this AI could be so big so fast. I mean, we've had computers for decades now. We've had other technology. It's like, why is all of a sudden within a 3 to 5 year period is AI going to overtake the world? I don't get that personally, but once again, I'm not an expert. I haven't really looked into it. I just let the price action tell me what's going on. And obviously, these big companies continue to run, and you've lost a lot of money if you've been trying to guess when to short them. That's for sure.
Yeah, and these are the call options over here, put options over here, and we were basically looking at $100 per share out of the money, and they're trading at 41.45. Implied volatility is 52%, which is extraordinarily high. That's why you have to do a bear spread if you want to bet that it's going down. If you think it's going to the moon, then you play call spreads because you have to insulate your risk. For example, we buy the 780s at say 42. Then let's say we buy the 750s at 32. So that's a cost of 10, which would be $1,000 for one contract on each side. So we're shorting the 750s, buying the 780s, and your max gain would be 3,000. That still only gives you a 3-to-1 reward if Nvidia is below 750 between now and the third Friday in May, which is 107 days. I like going out 90 to 100, 110 days. That seems to be a good window. It forces you. It's like betting live in-game betting in the first quarter. You still have second, third, and fourth to go to be right, as opposed to trying to bet with 3 minutes to go that your team is going to somehow win the game down by 4. So that's the reason there. And I also did this, Steve, and I know I do a little playing around with coding in Python. And Python has packages, right? So you don't have to code necessarily the machine learning part of it, but you still have to teach the code what it's looking at and what how it interacts with each other. And I applied it to the NCAA tournament. So I went back all the way to 1976. I'm a nut, and played around with it, and then I ran it, and this took weeks to do. And when it worked, I was like, oh my God. And then it actually is identifying which teams are going to get into the bracket. And then from there, identifies a champion. So I ran it for 20 brackets. And for what it's worth, Auburn surprisingly came up quite a bit. And that's just food for thought. But the point of me saying that is not bragging about knowing how to code these things. The point is that the tools I use that are called artificial intelligence, one of them is Gaussian probabilities. That was actually technically invented in the 1950s. So I agree with you. Like, what has happened that all of a sudden now AI is the key word, and AI
Right.
this, AI that. It's almost it's almost like a bubble in itself.
No, I think it's exactly what it reminds me of. I mean, it reminds me of the late 90s, early 2000s. The difference, though, history rhymes. History repeats itself. You always hear the best saying is history rhymes. It doesn't always repeat, but I think history definitely rhymes. And obviously in 99, 2000, like with Amazon, Yahoo, all these companies, Google wasn't really even around barely yet. They started in 98, I think. Everyone could see the potential with a company like, say, Amazon, right? But they weren't making money, and their price to earnings ratio is extreme. The difference this time around is I do think maybe this whole thing's a little overblown. Like you said, we've had robots, we've had computers for 50, 60, 70 years now. So I don't quite get why in the next 5 years, artificial intelligence is going to change the world suddenly. But the difference this time around versus like 99, 2000 is that the companies at the forefront, Microsoft is the number one. It's like these are legitimate companies with a lot of cash. Like Apple's got a ton of cash, Google, so that's why here again, history rhymes. It doesn't necessarily repeat itself, but I think a lot of that is priced in. It is often the case, the market prices in the future are a lot of ahead of people talking about it. So the question just becomes how much of all of this is priced in already. I'm not going to try to guess. The price action is still bullish. The trend is still up. Once again, whether it's Bitcoin or the S&P 500, daily, weekly, monthly, the trend is up. The 1 or 2 bars in Bitcoin might be down, but the trend is way up still. And let's not forget, too, that Bitcoin run over the last month or so is basically a straight line up. We know that can't continue. So that's like Nvidia. Nvidia had that hard pullback a week ago when we did a show, and it's ticked back up since. And that's what could happen with Bitcoin. We'll find out. That's why you have a tight stop. But once again, I don't think any new money in Nvidia. I don't think new money into Bitcoin, even new money in the S&P, makes much sense right now. The risk reward is no longer there. It's not good.
But one of the things I like is a good old boring 10-year Treasury note. And people make the mistake of thinking that they're boring and they don't make any money. But every 32nd of a point per contract here is $31.25. So your leverage in these futures contracts is enormous. And it only takes a few $1,000s to control a $100,000 block of 10-year Treasury notes. But this chart here, I think the 10-year is ready to go up in price significantly, probably up into this 114, 115 range over the next 30, 45 days, maybe 60 days. But the trend here is really starting to turn up. And you had wave 1 of the Elliott wave. This is 2. Now we're doing 3. And Elliott wave is 5 waves. So if this is, in fact, a major low or high in yield, then all these easings that are priced into the market, the Fed really is behind now. And the longer they wait, my concern is that we are going to have some kind of recession in the fourth quarter of this year if they don't start moving to lower rates, because the market has about 3 25 basis point easings factored into their pricing right now. And the market has always led the Fed ever since Paul Volcker had the guts to put interest rates up into the 20s to curve off the stagflation that was going on from the Jimmy Carter era and the price freezes. That was a great idea. It just didn't work in the real world, but it was a great idea and it was worth trying. It didn't work. But ever since then, the market tells you what the Fed's going to do. You don't have to sit around and wait for the announcement later today on what they discussed in their last minutes. And I mean, they got to be discussing easing. And if they're not, then the recession cloud is definitely in play. But what do you think about interest rates between now and year end?
Yeah, there's no question that the tail wags the dog with the Fed.
Yeah.
I mean, it's the market's decided. And I think the key to the Fed now, and you'll see the biggest moves, by the way, aren't at 2:00 Eastern. It's at 2:30 when they start talking about the future, because then they start dropping little, every word is handicapped and analyzed that they say. And, they start dropping hints. And I think they do it to see how the market will react. And if they want to ease, then they're going to drop a hint that 3 months from now we're going to ease. So that gives the market time to correct. So yeah, it's all a self-fulfilling prophecy by the time they actually do it. And if they did do the right thing, it would shock the market. I mean, perfect example. I mean, this is like, once again, you teach a first grader this, like we went from 0% to 4%, right? And they did it over like 75, 75, 75, 25, 50, 25, 75, 50. They knew where they had to get. So what they should have done theoretically is just gone from 0 to 4. But we all know why they can't do that, because it would have been a shock to the system. And the stock market would have been down like 25% probably in a day, or who knows what would happen. But it is kind of silly, John. Like they know where they need to get. And the sooner you get there, the better for everybody, because it's going to stop the inflation sooner. It's going to slow down the real estate market sooner. But they do it every 3 months. And they go 75, 70, and they never went 1. It was always 75, 75, right? And then it was 50, 25, whatever. But yeah, it's very obvious what's going on. So the question becomes, where do you think the economy is going? I will say this, with Bitcoin skyrocketing, some of that had to do with the ETF and it's, Bitcoin itself. But let's not forget about gold. Gold's basically at an all-time high, and it broke out this past week. With Bitcoin and gold at all-time highs, how could you argue that there's not probably some inflation looming, at least in the futures markets? I mean, it's like, why, or the other analogy would be something bad's going to happen with the stock market, right, which hasn't happened yet. So it's like you can't have it all. It's like Bitcoin and gold at all-time highs, and they haven't been as correlated as they should be. Everyone says Bitcoin is the new gold. Well, it's looking that way now because they're both moving up at the same time.
Yeah, and that's gold right there last year. And this is the most recent move, but look at this spike. It broke through here, and the solid green candles.
And it's off to the races when it broke through. Like, that's exactly what we talk about when it breaks a long-term held high. That resistance becomes support. So that is now the new support. It might pull back to it, but here again, your risk reward is really good using that right there as your new support. and it could run still several hundred above. So here, another good risk reward trade if you had the right stop loss. And you can see where it broke out there. There's a lot of tests to it all the way back there on the left, and you can
Yeah.
see all those tests there for several bars, and then boom, when it broke out hard. The biggest bar of the entire chart was the breakout bar. The one right after that was pretty close as well.
And here's little engulfing candle at the
And
top.
is that your sentiment also in the yellow line?
Yep. And
Look at
that's
that. It's like an
it's
all-time low.
well, it's 40. It's misleading because it's been so high and it hasn't been below
Oh, I
40
thought
months.
that's not 0. Okay, that's like middle of the
Yeah,
pack. But
that's
still, it's
42
decline.
right there.
But it's decline. It's higher price
Right.
and lower sentiment, though, which is still a
Yep.
pretty breakout bullish indicator.
Yeah. So this trend is much stronger than the Bitcoin one.
Oh yeah, well, and I think this one's a lot
Much
earlier
stronger.
too. Good point. I mean, if you feel like you missed the Bitcoin boat, which I think you probably have, you have not missed the gold breakout, perhaps. So this would be where you probably should focus.
You know, it's funny. I never like getting into any type of boat where I don't know what the engine is or how the engine works, and I really still to this day don't understand Bitcoin.
Right, but you
Um,
understand gold.
I understand gold. I
Yeah,
understand
same here.
silver. Copper is a great indicator of economic activity. Let's take just a quick look at that, and then we'll go to natural gas. But copper is used. Think about building a corporate building or a skyscraper. How much copper wiring, and there's a ton of, no pun intended, a ton of copper in construction. And when you have construction expanding, there's greater and greater demand for it. Looks like it's pretty neutral right
Oh
now.
yeah,
So
as I say,
again,
try to find a trend there. I mean, that is a sideways
right.
market if you've ever seen one.
So that supports my belief that the Fed should have moved maybe twice by now. And I'm not saying I'm any smarter than them, but historically I've been around this thing for about 40 years and have some extensive experience from Wall Street. And I think they each week that goes by they're getting a little bit behind. I mean, you can do 25, and then okay, well we did 25, but now things have changed. We're going to take that 25 back. That's not the end of the world. But if they have to start, dropping 50 basis points because the economic numbers are just horribly bad, then they kind of blew it. I'd rather do 25 now. This is I mean, you can always rip the Band-Aid off, right? It's not like you're hemorrhaging, but when the leg is cut off and you only have a tourniquet, then it's not good. I hope that analogy made sense.
No, it doesn't. I think it shows what the charts are, like you said, the price action is going to be the predictor ahead of what actually happens. And copper is sideways, gold and Bitcoin are running to highs. So it kind of tells you what probably is going to happen.
And here's 3 years. Each candle here is a week of natural gas. So we had a high up here at 10 in the futures market. I think the actual product was probably around 11, right? But still, it's down to what is it today?
It's like 1.7, I think, when I checked earlier in that range.
Open high. It actually just broke through two on the high right now, buck 93, and this is the week of March 4th, starting March 4th. So let's go back to the daily because I know
Yeah,
last time we
1.93
did
right
this,
now.
there's this now. So you are starting to turn up. It's hard to see because this is 331. Down here is the low was a buck 52. So that's lost half its value, and the chart doesn't do it justice, losing half its value. But now we're starting to get banging against two, and it looks like it's going sideways, but it really isn't. This is more indicative of what it's doing, and that's not many days. But this is a buck 50, 158 roughly down here, and now we're banging up against two. So that's a very significant move. I mean, off the top of my head, it's about 33%, right? So do you think this is going to go further, Steve? Because you are the expert that I know on natural gas and the market. So interested to hear what plans you have for any trades.
Well, I mean, if you look back on December 10th on the weekly chart, like 2.3 was kind of the all-time bottom, and then it did go up to about 2.5, 2.9, closed around 2.5 a few weeks later, but then it's dropped and it broke out below that all-time low all the way to about 3 weeks ago. So, we've already seen it fail once, but and the point's always been, though, the risk reward is still fantastic on this because once again, it's not a stock. It cannot go to zero. It's a commodity that's widely used. I mean, I don't know enough about natural gas as far as how low it could go, but find it hard to believe it could drop below 1. I don't know. I mean, so let's say that the risk is like 1 more point down to zero 0.9. I don't even know if it could possibly go that low. The
Well, that would
absolute
be
low
another
is
50% loss.
yeah. So I mean, just let's take the worst case scenario and says it drops to 1.0. As you pointed out on that chart, it was around 10 like a year ago, less than 2 years ago. So you're talking about like an 8-to-1 ratio on risk reward there, from 2 to 10
Yeah.
versus 2 to 1. So I think you trickle in. I don't think there's anything wrong with kind of dollar cost averaging in here. If you're right, you get in at the low. If not, you're getting in at lower prices. I mean, you can buy 10% each week, but your risk reward is fantastic here. You're talking about a legitimate 8-to-1 risk reward ratio on a commodity that is not going to go to zero, cannot go to zero, and it's remarkable, and it's also not very loved. And you want to see, the fact that it didn't hold that recent low a few months ago. I actually kind of like this low even better because I think this probably was the bottom a couple weeks ago. And we're starting to see it trickle up. It doesn't mean it's going to break out. It could still be sideways for a while, but we're going to look back in a couple years from now, and it's going to be much higher than 1.9. I'm almost certain of that.
Yeah, and looking at the options here, if you really wanted to be aggressive and think it's going to break through 2 and then start going,
Yeah, the problem with the options,
they're
though,
actually
obviously,
pretty
is I
cheap.
definitely don't see like a monster breakout anytime soon because everything's just been so kind of nonchalant sideways. And even when it had that little bit of an up the other week, it didn't really hold. I think the problem with the options is that Bitcoin, gold, they can be a little more volatile. It just doesn't look like natural gas has that volatility right now. It's going to really pay off in the options markets in the near term, at least.
Yeah, and the volatility is pretty high. It's 47%.
Yes,
But
yeah, it just the recent chart action just well, although like you said, these are little moves, but I guess it's misleading, right? Because when you go
yeah,
from 1.5 to 2, that's a 25% move, even though it's only half a dollar. So I guess that kind of gets lost a little bit with the low price.
I mean, you look at a price of 11, and now it was recently a buck 50. It's mind blowing,
And once again, this isn't some like, class C company whose bonds are going to go under, they're going to go bankrupt. This is natural
right?
gas. It's one of the more important commodities in the world. And we've seen stuff like this. I remember when the stock market was running in 2000, gold was around $200. And I remember I was just starting to get into commodity trading back then, 24 years ago. And historically, I was just like, this is insane. I mean, gold is a commodity that is not going away. It's actually a value commodity. But there again, you don't want to try to time the bottom, and it's not a falling knife anymore. I will say that we're not trying to catch a falling
Yeah,
knife. I want to be very clear about that because this did bottom, broke through that a little bit, but even the more recent bottom, it's been very organized.
yeah.
And as you and I talked about, it's almost like a rounding bottom process, and this is what I love looking for. And here again, I'm not trying to time the breakout or predict the bottom, but it's all risk reward ratio for me. You just slowly trickle in 10% a week, however you want to do it, 2-3% a day. I mean, that way you're getting different price points. If it breaks out, you're in already. If it drops more, you're getting a better price, and it will be up in 5 years, 3 to 5 years. I mean, it's just I'm not a buy and hold guy with stocks or commodities, but this is what would be one of the few buy and holds I've seen actually recently, which kind of intrigues me.
Does me too. We always like looking at some of the sports stocks. So DraftKings, came out with earnings back here. Let me just enlarge this. And right here is the earnings.
It's like a
And
double
then
top.
it gapped down big because they were disappointing. But look at the rally on the bad news. Then people, sold into it. But this double candle here, I think this is just there's a pattern called three black crows. If we get another red candle down that has very little wick, in other words, it opens and it just continually drifts lower and lower and lower and closes on the low. If we get a third day like that, my bullishness on this stock is going to go away. I thought this stock could probably get into the mid 50s, and it still might. But right now, the jury's out. It's kind of like looking at the 76ers without Joel Embiid around and wondering if they're going to be okay in the playoffs. And it's kind of how I feel here with DraftKings in many ways. So for
But
what
it
that's
almost looks
worth,
like a double top to me that it can taken out.
yeah,
It wasn't able
right
to take
here.
out the all-time high there or recent high. That's not a good sign to start with. And like you said, then the two straight down reds. Now, my guess is it'll probably peak back up and try to take out that top again, and that'll be the great indicator. You'll know one way or the other. If it takes it out, it's going to be off to the races. If it doesn't, you don't see triple tops too often. So, and we might not see it. This might already be on its downside, and there's definitely a lot of risk to the downside after this recent run up. See that recent gap
Absolutely.
down there, the gap where you are there too, a ways back. I mean, that would be my
Yep.
downside projection right there if it doesn't take out this top.
And that's not the end of the world either. I mean, the stock has come up from the teens
Correct, and
pretty
that's why I
quickly.
think it's very reasonable because gaps usually fill, and that one never
Yep.
filled, which also would have some concern if you're long. I think this is probably a pretty good time to take off some of the position. If it breaks out from the highs, you can always get back in, but you can definitely limit some losses to the downside right now.
Yeah, I agree 100%.
By the way, North
Any other,
Carolina is going live in about 2 weeks, March 16th or so, right before the tournament. And that's another one that's probably buy the rumor, sell the news. I mean, it's been news already, but once again, you got to figure that was priced in probably over the last couple months since that became known. That could be also another indicator it's kind of run its course now.
Yep. Any other stock you want to look at before we conclude the show?
No, I mean, natural gas was the one I was going to mention. Bitcoin, I think we touched on all the ones that are pretty interesting right now from risk reward perspectives.
Yep. And of course, Nvidia. Let's see what
Yeah,
that is real quick
I just don't
before.
have a feel for that company. I mean, I haven't messed with it. It's just so correlated to the stock market in general. We talked about this last week in the hit going back over 100 years. We're about as high as we've been two other times as far as the top 10% of the stocks making up the majority of the market. 1929s, like late 20s and 2000s, I believe. So that in itself would be a concern, but it doesn't mean it can't continue because it often does.
Well, right now we have Doji. Maybe it's time to buy those that bear spread. It is like walking across the train tracks and not knowing that if you go long on this stock, it's very dangerous.
But look at your sentiment also. It's pretty high, right?
Yeah, it's really high, like almost mathematically impossible to
To
possibly
get any
get
more
here
exact.
high.
Which
It's
and that's just
88.
what I love
I
about
can't.
that indicator, though. I mean, for people that don't understand why I like it, I mean, if everybody's already bullish, they're already in it. There's not many buyers left. That's the problem, right? It's like
Yep.
it's the same thing with when it reaches a bottom. The reason you want to look like like natural gas, there's no sellers left, right? Everyone's sold already. Everyone that was at 10 or 11 is sold over the last couple of years. That's why these sentiment indicators. It's the same thing with the public information in sports betting. It's a two-way market. So you got to have buyers and sellers on both sides. And if it gets very top heavy on one side, the prices are going to get out of whack, and they can stay out of whack in the short term. That's why you have to wait for things to turn over. And I don't feel like this has turned over yet. Obviously it hasn't. It's at another high today, but I think it will turn over here in the next few weeks. I would not be putting new money in it at this point.
No, because you just never know when the big boys are going to come in and start pounding it. Profit taking is in the cards. Like you don't go broke taking a profit, and if you're for example, one of the big institutional, and you have a big position in this, and you're overweighted now in your your funds account that you manage for people, because this rally's increased the percentage of holdings in Nvidia across the board in any institution is now much higher weighting or weighted than it was even a month ago. So
And with
that
this,
that's the
yeah,
whole point with
and with the sentiment so high on those pullbacks, there's less buyers now to jump in where they are earlier on. People that want to get
yep.
in jump in more in the pullbacks, and that's why it becomes diminishing returns at some point. Yeah, it's an excellent point, and that's why we see the big drops in a 1 or 2 day span. It's like in the sports betting market when the lines move, right? It's not the public little bets; it's the big boys. The professionals are hitting games. You see them light up across the board. It's the same thing with these big daily moves, but that's also why you need more than just 1 or 2 bars, 1 or 2 days. Because like right there, if you were to see that a week or two ago, you would have thought the sky was falling, and it's gone right back above those red bars. So that's why I like to look at the daily, the weekly, and the monthly, like you do, and
Yep.
you want to see confirmation with all of them, and you maybe want to trade all of them. That's another great way to kind of hedge your stops and everything. Is trade some daily, weekly, and monthlies. That way you're getting in and out at different times. And for anybody that's got a big position here, I wouldn't liquidate now. Just because I said I wouldn't put new money in, it doesn't mean I'd sell either. But I would have some moving stop losses. You can use either a moving average, support levels, and I would taper those at 4 different stop losses. So that way you're taking out 25% at a time. And if it runs, so those red bars there, if you took out 25%, you're still happy that it's gone up, right? Because you still had 75% of your investment. If you're taking everything out, you'd be kicking yourself right now. And there is something to the emotional hedge there. And I think you have to stay off tilt, poker term. So I like this. Stop loss isn't an all in or all out. It's, I like tapered stop losses. Just like you talk about the in-game betting, John, you're pre-flop, post-flop, you're putting in 25%, 25%.
Yep.
It's just a great way to do it.
And you got this little gap here too. But I think if you had a position of, God bless if you have 1,000 shares. If you had 1,000 shares in an individual, I think you'd be running to the market to sell it and book it, because the gain would be, almost life changing on 1,000 shares if you bought it last year. It's a monster number. But I think if you want to trail, like you're saying, like anything like 847.50 maybe, anything gets below 850, it's between the two moving averages here. And then that would show a little bit of weakness beginning to build, that the rally may be over, and, safe than sorry. I could be totally wrong, but this stock on any given day could lose 10%. It's gonna be wild to see how this thing finishes out.
But then again, though, if you had that mindset a couple months ago, you would have taken all your money out and missed another move. So that's why I'm a big believer.
That's right.
Yeah,
well,
you don't want to. I mean, the trend is up. You look at that chart right now. The trend is up, except for those 3 or 4 days right there in the middle. So there again, that's why I think a trail, a staggered stop losses is so important. You would have taken out about 25% the other week, but you'd still have money in the game on this recent run up. And even if it comes down a bit, you're going to still probably be, at least your next stop loss will be above where that last stop loss was. So it's just a great emotional hedge way to do it. I really think the tapered 25% of the time stop losses are kind of a win-win for all those reasons.
That's a 3-year weekly of Nvidia. I mean, look at this.
Yeah, that's you don't see that kind of slope. Once that slope breaks, also there's going to be some downside.
It's had, look at this, 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive weeks of gains.
But there again, after that 3rd or 4th week, you'd be like, it's going too straight up, and it keeps doing it. So that's another reason you don't want to get out too early, because you need to hit these home runs occasionally to make up for all the small losses. And that's the whole point of trend following, which I adhere to, is let your winners run and cut your losses short. And it's funny because it seems obvious, it seems like common sense, but most investors do the opposite. They let their losses run longer than they should, and they actually cut their winners short. So that's another reason I preach the staggered stop losses, because people get out way too early sometimes.
Yep. And those are my day trades. My day trades are the modest losses because it hit the stop.
Right.
Or maybe it's a couple days and I'm out because the signal didn't work.
Yeah, and you should have a 1 to 2%. We talk about in sports betting, bet 3 to 4% of bankroll in each selection. My stop losses are usually in the 1% range. So I'm risking, on that natural gas trade, you'd set your stop loss so you're down, 1% of bankroll. But then the winners could literally run 5, 10, 20% of bankroll. So you can take a lot of 1% losses when you hit a home run, and Nvidia is a perfect example of that. I mean, this is a home run here, and it hasn't stopped yet. So I don't think it's going to continue to run much, but you could have said the same thing a few weeks ago, and it keeps running.
I mean, it's up almost 650% from here, which was October 10th of 22, when it traded 112.
Yeah, it's just hard for me to believe that the whole AI game isn't already priced into this, though. I mean, how much more could be priced in at this point? It's just,
well, it kind of reminds me of one of those, basketball teams like Minnesota right now. The Minnesota Gophers are 14-2 for the season against the spread at home.
Well, shoot, they
And
were
that,
like
that
last week. They were 20-4 in all games. It's the best points spread
yeah,
record I've ever seen in sports, I think.
and it's kind of like this move here. Like these are all the games, and they just keep winning
Correct.
and covering the spread. But sooner or later, the market's going to overreact and price them too much, and maybe Indiana tonight takes them down. But
What's funny,
there's so
John,
many
because
similarities.
they had back-to-back spread losses about a month and a half ago, and I was like, I wonder if this is the turn. And they went 9-1 ATS right after that, and they were at 20-4 last week when I checked. And that's kind of what Nvidia did, right? They had those 2 or 3 red down days, and then they covered 9 of the next 10 games or whatever. So
Yeah,
yeah, the another great saying, I think it was maybe Buffett's partner Munger said that the markets can stay irrational longer than you can stay liquid. That's one of my favorite sayings. And for those that don't understand, that means don't fight these trends because you're going to go. You could be right. Nvidia is going to be down a year from now, but you're going to go bankrupt before that happens if you keep trying to fight this uptrend. So
you remind me of an old friend of mine when I was up there living 2 blocks from the towers, and it was 1998 ish. And he was a very smart guy. He managed to get about 200-300 million in a fund specifically designed to short the internet stocks. He was 3 months early.
oh
Had
yeah.
he started the fund 3 months later, God knows how many billions of dollars it would have turned into, because most of the ones he wanted to short at astronomical numbers went to zero. And one of the most saddest stories I've ever heard.
Yeah, his premise was right, and he still
Yep.
didn't win. It's just, I mean, the analogy would be like saying who's going to win a 7-game series in the NBA playoffs, but then betting everything on that team in game one, right?
Yeah.
Because that'd probably be the
It's
closest
right.
analogy. It's like
Yep.
you've got a math. If you know, like, let's rephrase it. Let's say I have a historical newspaper from 2 weeks in advance, and it says the Celtics win the NBA Finals. I have this information going into Game One. How much should I bet on Game One on the Celtics money line? They have maybe what they're going to win 4 out of 7. I know this, so that gives them what, a 56% chance if everything's a pick 'em of winning Game One, right? So I
Yep.
have a 100% certainty, and I don't have the math in front of me, but what 4 out of 7 is probably what, like 56% or so. I don't know offhand what it is, but like it's just
Yeah, I think
you
it's
know that
58 off the top of my head.
yeah, maybe it's in the 50s. So like you have almost you barely have better than a 50-50 chance of being
Yep.
right in game one, even though you know who's going to win the series. And they likely win that game if they win the series, but they also could lose a game because there's 6 more games. So yeah, and you have to have the price action in your favor too. You can't try to fight these stocks that have momentum.
I agree. Well, before I let you go, let's do a little wrap up here. I'll get rid of the chart here. I am.
57%. You and I were close.
I rounded up, I guess.
57.1.
But I humbly say I'm on one of the most incredible runs right now in my sports betting career. 25-6 in the NBA. Went 4-0
Awesome.
last night. I honestly woke up this morning to check the scores, thinking that 2-2 would have been good. So it is exactly what we're talking about
Yep.
here with this. But you got to grind out every single day, just like trading and sports betting. And out of the 100 cappers, Steve, that are over at sports capping, I'm ranked number 3rd right now overall. And can't really recall the last time I did top 3. Been in the top 10 numerous years, but never like this. This is just kind of like this chart right here. So someday, we're going to have a losing day, but 12 in a row now. And, hoping to get another green candle tonight. How are things with you? I know you've been red hot too.
Yeah, I mean, it's great basketball season. I think you and I see things a lot the same way. I've been ranked either first or second all year in college and pro basketball sides combined. I'm number 1 all time at WagerTalk, up over 180 units of profit in college and pro basketball sides combined in the history of the site. So seeing it well, I've got 4 strong best bets on a Wednesday. Really like this card, but you're right. I mean, even the games I've lost over the last few weeks, a lot of teams have blown double-digit leads. Like I even don't even feel like I've had the games handicapped correctly, which is something that's very important. Win or lose, I think it's more important that you're seeing the games right. And obviously, we're seeing them very well. And even the games that haven't won, I feel like I've had a handicap correctly. So just in that zone, and it is a lot like the markets. You don't try to fight that momentum because when things are going well for a company, they continue to climb. when things aren't going well for a company, they keep going down, right? And that's why you don't want to try to catch
Yeah.
those falling knives with bad companies. And you and I have been doing this long enough to really kind of honed in on our handicapping skills in both the markets and in sports, and it's paying off for both of us this basketball season.
Yeah, it's really cool because you and I started 1998, I believe, vegasexperts.com, which is still up and running. It's owned by Sports Capping, but it's still up and running.
Yeah, we started
And
last century.
last century.
We started
I,
before we both started before the internet, which is pretty crazy. I mean, that puts it in perspective right there. I mean,
it was right
like
at the.
early mid. Well, I mean that was, but you and I were already handicapping in the early
Oh, right.
'90s.
Yep.
So I mean that was our first foray on the internet, maybe, but we were already handicapping games well before that. So it's pretty cool.
Yeah, there was no email. You had to use. I guess the beginning was Prodigy. Was the first service, and you had to use. You used the phone. You had a lot of phones actually.
Yep.
So those days are kind of over. But anyway, I'll let you go here, and thanks everyone for watching. And always remember, bet with your head, invest with your head, and never over it. And may all the wins be yours. Thanks for watching.